Hello, fellow traders. 'Tis I, the Rumpled One. It is Wednesday, November the 22nd, the year 2017. Don't be a turkey. I wish you and yours a happy Thanksgiving if you celebrate. If you don't, that's okay. Don't be a turkey. You know, turkeys get slaughtered for Thanksgiving. But in trading, some traders get slaughtered, and it happens every day. You know, it's easy to be a turkey. You fall for somebody else's idea, method, strategy that just isn't based on anything, really. You know, myths, conceptual mind games, I guess is one way of looking at it. You know, it's just really funny because when I first came, to online trading, I fell for some of the stuff. So, I can understand where people came from. RSI and MACD, stochastics, all this stuff looks really cool. When all you just need is a horizontal line or two and just use your eyeballs and some common sense. I mean, basically, apply what you know when you go shopping at the store. You're not going to buy something that costs more than it really should, or you're going to wait for it to go on sale if you really want it, unless you can just afford it and price makes no difference to you. And it's the same way in the market. You buy cheap, you sell dear, and it's just that simple. So, that being said, yesterday when we looked at the euro yen, you can see it had plunged below the weekly low. And it opened above it and plunged below it again. You see, it didn't get past the open. So what happened here? You had an inside bar, a daily inside bar right here, and it broke out there. It broke through the weekly low, which is part of the weekly wick zone, and it's just that simple. Once again, no squiggly lines were harmed in using this chart. You can see here the weekly open, we're 51 pips below it. And for those of you keeping track, the euro pound still hasn't filled the gap. Let's just take a look at that. I'm curious to see what it... Let's switch over to W1. There's the close, there's the open. It just didn't fill that gap and most likely won't this week. And we can flip back over here to D1. And looking at the dollar yen, you can see here it broke through the weekly low, broke through last week's weekly close, broke through the weekly open. So you could have taken a trade at either one of these three lines to the south. Also broke out of the previous day's wick zone there, which I think we can see it right here. There we go. So once again, simple trade. Close the open 83 pips. I'm sorry, yeah, from the close to the open, 83 pips. You can see here we're 87 below the daily low, and we've bounced 12 pips off the 12 pips, let's see, 87 pips below the daily high, 12 pips bounce off the daily low. So right now, that being said, you can see that the dollar yen's in the lower rat zone or green rat zone right there. See, we had a 98 pip range. All very, very simple Simple stuff. You don't have to be a turkey. You can stop being a turkey anytime. I mean, it's hard to be a turkey if you're using horizontal lines in your eyeballs. And the other thing about not being a turkey is you have to be patient. You have to wait for the opportunity to present itself. I mean, how many times have you entered a trade only to see it go against you, and maybe had you waited an hour or two, or maybe even a day or two, that if you would have just waited and then entered at that exact same level, you'd be in profit, as opposed to maybe hitting a stop loss or a horrendous, account busting occurrence. Once again, just really simple stuff here. In fact, I forget, I was in a playful mood a long time ago, and I think I wrote a indicator. I think it was YSAT indicator, the you suck at trading indicator. And what it did was, when you put an entry in, say you were going to buy right here at 111.62, it would put your order in at 110.62, or it would tell you that's where you should enter to just wait for it to get there, because you're so bad, chances are it'll go 100 pips against you before it goes your way. It was kind of a joke, but it was one of those things where it told a tale, because many people who tried it actually profited, because it made them wait. They go, wow, it saved my bacon. See, problem is when you missed one trade that would have really, made you 100 or 200 pips, then you go, oh, I'm never going to miss a trade like that again. And you wind up, basically getting on the bus heading in the wrong direction. You were buying, you wanted to be on the northbound, but you wound up on the southbound. And see, once again, we can look at the buy zone here. There was no triggers long. You had a couple of times here if you're using the H1 to get short. Once again, simple stuff. We can look over at the Euro Yen here. There was one trigger in the beginning that failed, or maybe you could have got a pip or two out of it. 8, yeah, you could maybe 2 or 3 at best. Probably had to be really quick to get it. But then, if you went the other way, more than made up the loss. Once again, the beauty of the buy zone, price has to range away from the open. That's how you get the daily high and the daily low. Real simple stuff. It just happens every day. So if something happens every day and you want to trade every day, do something that happens every day. It's just, once again, it's simple. You won't be a turkey. And once again, we are looking at the rat zones, and let's see, where's the Euro Yen? Right here. And you can see here it came out, dropped below a couple times here, that upper rat zone or red rat zone, green rat zone here. And we've got the wick zone here on the dollar yen. You can see it popped out of that lower wick zone and to the upside, and then as usual out the other side. Price does not like to stay in the wick zone for long. Once it goes in, it almost always comes out, at least 70-80% of the time, depending on which pair you trade. And let's see, let's switch over to the Euro Yen. And you can see here it hit the upper daily wick zone only to come out. It entered the lower wick zone only to come out, and you see it's going back inside right now. And just looking at price action, once again you see it put in a 3 ball at the high, 3 level ZZ semaphore indicator, and then it made an inside bar, broke out lower high, broke to the low. You can see here it's just making lower highs. You could have, that was a 10 pip ride. And you see here it made a higher low, broke out, and then there was about what, 6 or 7 pips to the upside. Or just trading the horizontal lines. It crossed below here, crossed below, dipped back in. You could have taken your 10 pips, stopped, taken your 10 pips, exited, and then maybe reversed, picked up some, maybe a few more, and then once again price action. Here we go, a lower low, a higher low, breaks that high, and there was pips. So do you see the pattern here? A lower low, a higher low, and you see on this bar it breaks the high. On this one, a lower low, a higher low, breaks the high. It's not difficult, just little simple things that keep you from being a turkey. I mean, it's so easy to get caught up in these interesting, scientific, alluring names, you know, something with the word divergence in it. You know, it just draws you in. You know, things that just sound good, like the trend, or what was one? The cash spitter. I think I saw that one yesterday. I mean, all these things with these fancy names. I mean, you can point your finger at me and go, well, you got the rat zone and the buy zone and the wick zones, but I don't know if zone is, if maybe it is a fancy name, but it just describes an area. I mean, sure, I think I had one, what was it? I think I had the snapback or rubber band. I made that a long time ago. But, you know, it works. I probably have to dust that one off. Because most of these are refinements of the same concept, which is either price is going to leave a zone, whether it's just a couple horizontal lines like this, or if you use them based off of statistics like the rat zone or the wick zone. And still, it's a zone trade. It's price moving outside of 2 horizontal lines. Basic price action. You know, and yes, I do have some gauges that, you know, they just tell me, rather than me have to analyze, I can see, okay, here on the 5th, let's see, we're on the M5 right here, so it's not making a higher low, but I mean a higher lower low. It's made 4 higher lows and it's made 1 lower high. So I can look at this and see, is price going up or price going down on all the different time frames, rather than have to flip back and forth between charts or sit here and click and look and then try and remember. That's what these meters and gauges do. But it doesn't matter what you use or the method, right? Because it's not what you trade, it's how you trade it. TheRumpledOne signing off for Thanksgiving. See you on Black Friday.